How to analyze a stock in 60 seconds. Welcome to Be a Baby Billionaire. Understanding a company's corporate governance is paramount when assessing its investment potential. Corporate governance refers to the framework of rules, practices, and processes by which a company is governed and controlled. It provides investors with critical insights into how effectively a company is managed, the alignment of interests between management and shareholders, and the mechanisms in place to ensure ethical conduct and accountability. Evaluating corporate governance practices is essential for making informed investment decisions, as it influences long-term business sustainability, strategic decision-making, and ultimately, shareholder value. 1. Company overview. When analyzing a stock, start by quickly grasping the company's business model, industry, and key products or services. Understanding the business model helps to contextualize how the company generates revenue and its strategic positioning within its industry. Key questions to consider include how the company makes money, its market share, and any unique aspects of its products or services that give it a competitive edge. This overview provides a foundational understanding necessary for further analysis of its financial health and growth prospects. 2. Financial performance. Assessing a company's financial performance involves examining recent revenue trends, profitability margins, and cash flow dynamics. Look at whether revenue has been growing consistently, or if there are fluctuations, which can indicate market demand or operational issues. Profitability margins, such as gross profit margin and operating margin, reveal how efficiently the company converts sales into profits. Cash flow analysis is crucial to understand how well the company manages its liquidity and whether it generates sufficient cash from its operations to fund growth or service debt. These insights into financial performance provide a snapshot of the company's operational health and sustainability. 3. Earnings history. Reviewing a company's earnings history entails examining recent earnings reports and identifying trends in earnings growth or declines. Analyze whether earnings per share have been increasing over time, signaling potential profitability improvements, or if there are periods of decline that may indicate underlying challenges. Understanding the factors driving earnings trends, such as changes in revenue, cost management, or one-time expenses, helps gauge the company's ability to generate profits consistently. Earnings history provides valuable insights into the company's financial trajectory and its resilience in varying market conditions. 4. Balance sheet strength. Evaluating a company's balance sheet strength involves assessing key items such as cash reserves, debt levels, and current assets relative to liabilities. Cash reserves indicate the company's liquidity and ability to meet short-term obligations without relying heavily on external financing. Debt levels should be manageable and sustainable relative to earnings and cash flow to avoid financial strain. A strong balance sheet with healthy liquidity and manageable debt enhances the company's financial flexibility and resilience during economic downturns or unforeseen challenges. 5. Valuation metrics. Calculating key valuation metrics such as the price-to-earnings, P/E ratio, price/earnings to growth, PG ratio, and dividend yield is essential to gauge the stock's value relative to its earnings and growth prospects. The P/E ratio compares the current stock price to earnings per share, indicating whether the stock is overvalued or undervalued compared to its peers or historical averages. The P ratio adjusts the P/E ratio for earnings growth, providing a more nuanced view of valuation relative to growth potential. Dividend yield reflects the annual dividend income relative to the stock price, appealing to income-oriented investors. These metrics help investors assess whether a stock is priced attractively for its potential returns and manage risk based on valuation levels. 6. Market position. Understanding the company's market position involves assessing its competitive standing and market share relative to peers. Evaluate factors such as brand strength, product differentiation, and distribution channels to determine how effectively the company competes in its industry. Market share data provides insights into the company's penetration in its target markets and its ability to capture customer demand compared to competitors. Analyzing market position helps investors gauge the company's growth potential, competitive advantages, and potential risks from market competition. 7. Management quality. Assessing management quality involves evaluating leadership effectiveness, track record, and any recent changes in the company's executive team. Look at the CEO and key executives' experience, strategic vision, and their ability to execute business plans effectively. Consider management's response to challenges, their communication with shareholders, and their alignment of interests with long-term shareholder value creation. Changes in management, such as CEO succession or significant leadership appointments, can impact corporate strategy and investor confidence. Assessing management quality provides insights into the company's governance practices and its ability to navigate industry challenges and capitalize on opportunities. 8. Industry analysis. Conducting an industry analysis entails evaluating growth prospects, competitive dynamics, and regulatory influences affecting the company's sector. Consider macroeconomic trends impacting industry demand, technological advancements driving innovation, and regulatory changes affecting market participants. Competitive dynamics, including market concentration, barriers to entry, and pricing trends, influence profitability and market share within the industry. Understanding industry dynamics helps assess the company's exposure to sector-specific risks and opportunities, guiding investment decisions based on industry growth potential and competitive positioning. 9. Recent news and events. Checking for recent news and events involves staying updated on developments that could impact the company's operations or stock performance. Monitor news sources for announcements such as mergers, product launches, or regulatory changes affecting the company's market environment. Corporate actions like earnings releases, dividend announcements, or legal disputes can significantly influence investor sentiment and stock price volatility. Assess the potential impact of these events on the company's financial health, competitive position, and strategic direction to make informed investment decisions. 10. Technical indicators. Glancing at basic technical indicators involves analyzing charts for trends, support and resistance levels, and moving averages to understand stock price movements. Technical analysis helps identify patterns in price behavior, such as trends, upward, downward, or sideways, and potential price reversal points based on historical trading patterns. Support and resistance levels indicate price levels where buying or selling pressure historically intensifies, influencing future price movements. Moving averages, such as the 50-day or 200-day moving average, provide insights into the stock's momentum and trend direction. While technical indicators complement fundamental analysis, they offer valuable insights for short-term trading strategies and timing entry or exit points in the stock market. 11. Analyst ratings. Reviewing consensus analyst ratings and target prices provides valuable insights into market sentiment towards the stock. Analyst ratings typically range from strong buy to strong sell, reflecting analysts' assessments of the stock's potential performance. Target prices indicate where analysts believe the stock could trade in the future based on their financial models and projections. Consensus ratings and target prices help investors gauge market expectations and compare them against their own investment thesis, providing a benchmark for evaluating the stock's potential upside or downside. 12. Risk factors. Identifying potential risks is crucial to assessing the overall risk-return profile of the stock. These risks can include regulatory risks stemming from changes in laws or policies affecting the company's industry, market risks associated with economic downturns or fluctuations in market conditions, and company-specific challenges like operational issues or competitive pressures. Evaluating risk factors helps investors understand the potential vulnerabilities that could impact the company's financial performance and stock price. By considering these risks alongside potential rewards, investors can make informed decisions about whether the stock aligns with their risk tolerance and investment objectives. 13. Dividend policy. Understanding the company's dividend history and policy, if applicable, provides insights into its approach to returning capital to shareholders. Companies with a history of consistent dividend payments and growth demonstrate financial stability and a commitment to rewarding shareholders. Analyzing dividend yields and payout ratios helps assess the sustainability of dividends relative to earnings and cash flow. Dividend policies can also signal management's confidence in the company's future prospects and cash flow generation capabilities. For income-oriented investors, dividend-paying stocks offer a source of regular income, enhancing total return potential. 14. Investment thesis. Formulating an investment thesis involves synthesizing findings from company analysis, industry research, and market dynamics into a concise rationale for investing in the stock. Consider factors such as the company's competitive position, growth prospects, financial health, and valuation relative to peers. Identify key catalysts that could drive stock price appreciation, such as new product launches, expansion into new markets, or operational efficiencies. Balance these potential positives with identified risks and challenges to create a balanced view of the stock's investment potential. An investment thesis serves as a roadmap for making investment decisions and can evolve based on new information and market developments. 15. Decision-making. Summarizing whether the stock appears attractive for further research or immediate investment involves synthesizing all aspects of your analysis into a clear decision framework. Assess the alignment of the stock with your investment objectives. Consider factors such as valuation metrics, growth prospects, analyst ratings, and identified risks. Evaluate whether the current price offers a margin of safety relative to intrinsic value and potential upside. If the stock meets your criteria and presents a compelling investment opportunity, you may decide to conduct further research or initiate a position. 16. Corporate governance. Assessing corporate governance practices provides insights into how effectively the company is managed and whether shareholder interests are prioritized. Evaluate the composition of the board of directors, their qualifications, independence, and diversity. Review governance policies and practices related to executive compensation, shareholder rights, and transparency in financial reporting. Strong corporate governance enhances investor confidence in management's ability to make sound strategic decisions and navigate challenges effectively. 17. Summing up. Corporate governance serves as a cornerstone of responsible and transparent business practices that underpin investor confidence. By scrutinizing factors such as board composition, executive compensation policies, and transparency in financial reporting, investors can gauge the level of trustworthiness and integrity within a company's leadership. Strong corporate governance not only mitigates risks associated with potential conflicts of interest or mismanagement, but also enhances operational efficiency and strategic execution. Time for the soft question. What method and metrics do you currently use in analyzing stocks? Please share your thoughts in the comment section below. This will help everyone learn and grow together. Subscribe with us and learn. If you find the information in this video valuable, please subscribe and share it with family and friends. Your support will help us create many more high-quality videos like this. Please support us. Please hit the like button and the notification bell to be notified. Click on these 2 videos shown here to explore even more. The contents of this video are for educational and informational purposes only. Thank you for watching.